This is the 10-Minute Contrarian Podcast. This is VP. We are a solutions-based podcast, diving into the world of contrarian investing and alternative finance. You can find us hosted on the No Nonsense Forex YouTube channel, NoNonsenseForex.com, and podcast players everywhere. Episode 170 is brought to us by Bybit. I noticed something unusual this week. The market did really well and moved up, and typically my traders pounce on that. For some reason, people were relatively inactive. Doesn't make a lot of sense. This is the type of market where active traders win. And if you have signed up to Bybit through my link and you have not deposited, or if you have deposited and not traded, now is the time to really start getting active. If there is a recession coming, good traders will do very well. Good traders will be able to offset a possible layoff or a possible downturn in their investment holdings. And you can even demo if you need the practice. Either way, get yourself signed up by clicking the link down below in the description, read the blog, see if it's for you. Click the link at the bottom of that blog and get yourself signed up and get yourself trading, because active traders are the ones that reap the benefits, because with Bybit membership, active membership, has its rewards. It is the 10-Minute Contrarian Podcast, and this week, the Federal Reserve did what it said it was going to do, and it lowered rates for the first time in a long time. It was really a foregone conclusion. The only real debate was whether it was going to be a 25-point rate cut or a 50, and they chose 50. We'll talk about that in a moment, but this is the moment we have really been waiting for as alert contrarian investors, because what's going on now is we are finally in the rate cutting cycle, officially. And if you've been with us, you have access to the St. Louis Fed charts that show just what happens when this rate cutting cycle happens, or soon after. You should also have the chart that shows the yield curve inversion. And where we are with that is, I think now, officially in uninversion territory. We were kind of dancing around the border earlier in the month, but it looks like we have officially cleared it. And so, yes, contrarians, you are here. We have officially arrived at our destination. And it's really gone the way, at least I've expected it to go. I mentioned this at the very first episode of the year, the big macro prediction episode. Everything is going exactly according to plan. Barring anything over the top, a recession was not going to happen until these two things lined up. And now, in late September 2024, they finally have. Now, as far as the 50-point cut, I was a bit surprised by that. I predicted on Twitter that it was going to be a 25-point cut. It just made sense to me, kind of just let everything down easy. There's really no reason to drop a whole lot. It's not like the economy is tanking. The economy's doing just fine. Or the markets are doing fine, I should say. And that's the metric they look at. So it would make logical sense to me for them to drop only 25 points, but that is not what they did. And it was pointed out by a couple different outlets. One of them was a response to my tweet saying, with the election coming, and maybe he didn't say this in so many words, but we've talked about it here, we know the Fed is a political animal and they're not supposed to be. We also know that the Republicans have come out and said that a lot of these people are more or less going to be fired as soon as the Republicans take office. So what do you think is important to them? The greater good of the American people and the world, or their own job security? I mean, it's pretty obvious. And I wouldn't even say it makes them bad people. I would say it's more just hubris. I really do think that these people strongly believe that they are what's best for the world. Therefore, it is their duty to do everything they can to stay in power. And whatever they do is for your own good. But I digress again. I do think, as far as a political move, as far as getting their people in during the election, you want to alleviate stress on the economy as much as you can so it can rise. And as we had said before on this podcast as well, it certainly did. Even people who are well aware of what happens after you have a sharp rise, a flattening, and then a dropping cycle, it doesn't matter. Wall Street in particular cannot sit there and play the long game, even if they know there is likely impending doom on the horizon. They need to make their numbers. They have clients who they answer to. And if they are not producing, but their competition is, then their clients are simply going to leave and go over there. So you are seeing likely what we've been talking about on the show for a long time too, the final melt up before the crash. Now, how long will this melt up last? Well, that's the million-dollar question, isn't it? And we'll tackle that a little bit in future episodes. Even though trying to time this thing really is not the smartest move at all. At times like this, you don't want to be sitting there trying to put too fine of a point on things. If you can, you want to take a step back, breathe, relax, and position yourself for what we feel, or at least what I feel, because all of the steps are in place now, is going to be a downturn in markets. Wall Street does not have the luxury of doing this, but do you know who does? Only the greatest investor of our generation and the biggest market manipulator of our generation. Don't ever forget that part. Warren Buffett has made some very key moves lately that people have noticed on Wall Street, but then again, they don't have the luxury of taking it at face value. Warren Buffett has been selling off a lot of his bank stock. Now, on certain stocks, like Bank of America, he can't really afford to sell too much of it because him simply doing that because he owns such a disturbing amount of it would cause shockwaves in the market. So he knows not to do that. But he is dumping, and dumping bank stocks is, not bullish, especially considering that during recessions, especially in the more recent ones, we have seen a number of bank failures. Banks who have not been absolutely prudent in their investments and in the way they do things, including which bonds they hold, including leverage. This is pretty much the vast majority of banks out there, by the way. They become very exposed and very vulnerable to these drops in the market. So banking is just not where you want to be during these times. Warren Buffett knows that, and he has acted accordingly. So even after the two major events that we know to almost always be a precursor to a recession, if you still don't believe it's going to happen after those two events have recently resurfaced, if you're still sitting there saying, I don't think it's going to happen, soft landing, no landing, whatever, maybe you should pay attention to what the greatest investor of all time is doing. Now, Warren Buffett was not just selling. He was also buying. One of the buys was a bit strange to me. Not completely, but he did buy Apple stock. I've never liked Apple. I think it's too tied to China. However, they have still done fairly well despite China dropping the way they have recently. So there is that, but that's not really something I would ever want to hold myself, at least not for a while. But the more alarming things he bought as well were Occidental Petroleum and Chevron, oil stocks, which, if you recall, this was a while ago when we talked about this, but when we talked about things that actually do go up in recessions, it's not many things. But oil stocks traditionally has always been one of those things you can pretty much guarantee to go up during a recessionary phase. Now, if the thing that causes a recession is something that's very alarming and kind of out of nowhere, like we saw in 2020, then these things are going to drop initially. But over time, if you're still looking for alpha during a recession, energy stocks in general are a very good place to be. And Warren Buffett is getting ahead of that. Now, again, it may not happen. The metrics that have been right every single time up until now could be wrong. The greatest investor of all time could also be wrong. But we here at the 10-Minute Contrarian Podcast like to play the odds. So I am going to assume what I've been assuming this whole time, and that is that a recession is finally on the horizon. So if for some reason you haven't been doing this yet, you probably need to plan accordingly. And as we merge into the solutions portion of this episode, let's go ahead and review how to do that. Now, don't forget, we are bullish on a number of things here, and we are fully participating in this melt-up, which we predicted would happen long ago. But this time is going to be a bit different now that we have arrived even closer to what could be a big downturn, and we don't know how rapid that downturn might be. So, what I would suggest is pay very close attention to your take profit levels, which everybody should have written down somewhere. If you are arriving at those levels, then that's good. Make sure you do not get greedy once those levels arrive. Take your profit when you are supposed to. If those take profit levels are a bit far away, not financial advice, but you may want to move them down a bit, just in case this downturn happens sooner as opposed to later. I hope this makes sense. And by the way, there's kids playing basketball outside right now. They just got out there. I'm not sure if the mic's going to pick it up or not, but if you're wondering what that is, that's what it is. But we move on. Now, quiz time. When the market begins to fall, especially if it falls rapidly, where's the one place everybody runs to? If you said Bitcoin, you're wrong. If you said gold, you're wrong. Everybody initially, historically at least, floods into cash. At this point, I really don't see the need to buy anything else. I'm really just looking to stack cash, and in particular, United States dollars. Now, I don't want to foreshadow the election episode too much, but there is a certain presidential candidate who is interested in lowering the price of the United States dollar greatly, and I get that, and that's fine. Now, the DXY has currently dropped all the way down to 100 at this point. Not even a year and a half ago or so, it was up to 115, which is very high. And so your average person, it may seem strange that I would want to accumulate dollars at this point, but do we not always want to accumulate things when they are cheap and then average down as they get cheaper? You can do this with fiat currency as well. And if you look back at history too, usually this panic into cash doesn't last a very long time. It really depends on when the recovery happens. And when that recovery starts to happen, you will see the value of the dollar go down. That could be a good signal that maybe a recovery is beginning. And now you can start buying things cheaply. Doesn't always mean that. But you guys know how to use your charts. This is really something to keep an eye on. But first things first. You have to protect yourselves. And cash here is, historically at least, the number one place you want to be. Now with gold. Gold has, if you want another sign, just look what gold is doing. Gold is a very telltale sign of what is about to happen. Large central banks are all buying gold and repatriating their gold. Oddly enough, they weren't doing this years ago, but they're all doing it now. Again, if you want to go against history and against Warren Buffett and against these large central banks, and you think you know something they don't, well, then you might actually be too contrarian for this show. But again, I am playing the odds. I am doing what rich people are doing. It's done me good so far. But gold, like a lot of things that are recession-proof for the most part, still do drop in that first panic phase. So maybe, and if you don't have any gold, I think you should get some no matter what the price is. But if you want to add on, it might be strategic to wait until that initial shock phase is over with and you get a bit of a dip in gold. Now, once that happens, what would that dip look like? Is that dip going to go from 3,500 down to 3,200? Well, if that's the case, then you should probably go ahead and buy now anyway. But just know this is one of the things you're going to want to look out for once this time comes. But gold, as it has always been, is the ultimate defense. It is the ultimate protection. I'm glad that we have always been ahead of this and that we stocked up when we did. But if I hadn't, again, not financial advice, I still think it would be a good idea to do it now. When you're buying something purely for defense, the actual price of that thing matters a lot less. Cheap is good, of course, but you still just, at the end of the day, you want to have it. And nowadays, there are multiple ways to do that. I have spoke about them on this podcast. I spoke about them on my trading channel. If you still need a reference, search for, I don't know the words, but it's on the thumbnail, it has a bunch of question marks on the front. Maybe just search for gold and it should pop up. Over to Bitcoin now, and Bitcoin is really interesting because, as we say all the time here, if you overlay the price of Bitcoin to the triple NASDAQ ETF, ticker symbol TQQQ, you will find that they almost always run together. So you could reasonably assume that the price of Bitcoin would drop in the early parts of a recession at least. Now, I do think that eventually this correlation will break. What would cause it to break? Well, my idea would be is because of what I saw in the past when Silicon Valley Bank and Silvergate and Signature all fell apart, the price of Bitcoin actually went up quite a bit, which for the first time made me think, okay, this thing is finally acting like a true safe haven. So maybe it will be the ripple effect of banks collapsing during this recession that will really trigger that break in correlation. I'm not sure. But as is often the case, if we see price go down in Bitcoin and it falls for fundamental reasons that just don't make a lot of sense, that's sweet divergence. That's what we want. Perhaps that would be the time to take that fiat currency that has been doing nothing but gaining in value during this initial drop in the recession and start switching some of it over to cheaper Bitcoin. Timing-wise, that might be a great idea. But as far as how to prepare right before the recession, I wouldn't put Bitcoin itself very high on the list. Now, as far as what to do with all of your other crypto tokens, I would treat them similar to if you had stocks right now. Look and see where those take-profit zones are. Maybe move them a little tighter, a little bit closer to you, and then get that initial profit taking in just in case this thing happens sooner as opposed to later, and a recession causes a lot of people to start liquidating those positions. Because if the price of Bitcoin is not going to be safe in an environment like this, I really can't see the price of Ethereum and Cardano and Avalanche and all the other things we hold being any safer. They're more or less tech stocks at the end of the day. So whatever tech stocks do, I would expect crypto to do that at an even more rapid pace. Now over to banking. I'm going to sound like a broken record here with this, but if we know that banks typically get wrecked in a recession and some of them go under, would it not make sense to make sure you have more than one? And at the very least, at least have another one open with a little tiny bit of money in it, just so you have it open and you have that tunnel already dug. Because as we said before, if you do what most people do and just be reactionary, and you're like, oh crap, I need to open a bank right now, you're going to be stuck in line with a lot of people, and that might not be the easiest thing to do. It's hard to run towards a crowded exit. If there's only one doorway and everybody's running towards it, only so many people are going to get through. But we've spoken at length about all the ways you can do that as well and all the avenues that are available to you, regardless of where in the world you live. So please just have those options open. If not now, when are you going to do it? When everybody else is doing it? That's the one thing you want to avoid. So during this melt up, when nobody's looking, except for Warren Buffett, get that shit handled. And the final thing will be what we spoke about earlier in the episode, and that is going to be energy stocks, in particular oil stocks. We said before, 2020 was a great example of this, how oil does drop when the panic sets in. But that typically gives you really attractive prices for the remainder of the recession when they typically go up. And a lot of these stocks give really nice dividends on top of that. So the best thing to do here is to maybe not do what Warren Buffett just did. We know Warren Buffett has such a long time frame, it doesn't matter. But if you want to be a little more strategic with this, you would simply wait for the panic drop, plug in your charts, track these things, and decide when a good time to enter would be. If you get the first entry wrong, that's fine. Take your loss and get ready for the next one. And you should be doing this with at least a weekly chart, a weekly time frame. These are investments after all. Doing it on the daily or something less makes absolutely no sense. But if you look at the long-term portfolios of a lot of funds and institutions and just long-time investors, who have lived into their 60s and their 70s, they typically hold on to a lot of these stocks and then just simply eat the losses. Even though they might have known a recession was coming, they still just sit there and take it. And those negative numbers factor into their overall return. Imagine a world if you didn't just sit there and eat it, you got out and you protected yourself, and then you actually understood how to make money as the recession was playing out. What would this do to your bottom line? All of my traders out there should know if you win by not losing, it makes a really big difference. You're taking gigantic losses and eliminating them from the balance sheet altogether. It's a cheat code at the end of the day, but only if you play it right. So the countdown has officially began, contrarians, officially now. You know what to do. Have fun during this final melt-up, but don't get crazy. Instead, just make sure you're early.